trades. Partially because nothing really stuck out to me, and partially because of negligence. My head was somewhere else, and that's why I had traded longer, right? So I missed this shelling point opportunity down here. Tape stopping and then getting above 38 presumably before rallying. I don't know why this is empty. Yeah, here we go. Still technically break even. That's a tick of profit with a high of 88. But that's not what I came to see. 913. Nine 13. Right here is where I realize that I've kind of sat through the session passively instead of trading it. And so, and so I make an initiative to do something. The auction shifting higher here. There's abnormal size and inventories emptying. So I take a normative mean reversion trade up to 41, presumably off of the 170, 130 being sold. I got out after that LE liquidity event as buyers exploded, and I chased price lower. The timestamp is 1330. The bid was 3975 at the HVN shelling point of today's value area. After the LE liquidity event from buyers hitting tape and exploding, I get out for two ticks. 917. 4175, 917. I go short on tape drying up, down ticking at a. Oh, I go long. Oh, yeah. I go long on a normative auction. That is, there's big buying. Bids at 4175, VPOC is 41, 41, even to 4150. There's a tremendous amount of volume on both sides, and the order flow looks pretty normal at the top. There isn't really anybody to trade against, which leads me to believe price is moving up. I get out for two ticks because I know that we are nearing the edge of a distribution, and the odds that absorption of buyers, mainly breakout traders, increase and I get caught offside is higher. That's exactly what happens at 42.25. 63 trades on the bid, and price sort of stagnates. Then 100 trades. The auction shifts higher though, and I get short after there's a real auction on both sides with a little bit of buyers being caught offside through an imbalance. And by auction, I mean from 42 even to 42.50. There's a tremendous amount of buying and selling on both sides. I get short as a mean reversion trade two ticks away from the auction at 41.50 timestamp. 1844. And I put my stop inside the auction rather than behind it. And I also fat fingered this trade because I put a short order in instead of a buy order. I went short, and I accidentally put 2 ticks of size on, which cost me $25. The next trade is, so that was a process error. And then the one contract I stacked, I got out for break even. This is another reversion trade at 39.75 off of 63 being absorbed on the sell side. 39.50. Price jumps 2 ticks after absorbing 36. And then I attempt to chase the auction higher, and I end up stacking twice on accident. First one I get out as price rallies. And then we see a plunge up to VPOC, which is where I try to get out, but the auction shifts lower. 79 and 78, 79 and 80, 40, 75. Trades right below VPOC. Before price comes back to my entry, and I scratch for a tick, meaning I missed my exit by a tick through not front running VPOC. I should have front ran VPOC and gotten out when the auction shifted higher. I could have taken it for a tick lower as well. And then I figured my sample size is so small that I have to trade more. So I did here. And I was still good to go. The next one is 925. Frankly, I can probably hold these trades for longer and trade more. 925. I get short off of an auction at 42, which is the value area high, shelling point. No imbalance on either side. A little bit from buyers who are absorbed, 18 at 42.25 and 150 compared to 100 at 42 even. I'm just looking for normal flow here. We see a fast move down and a heavy auction down to 41 even. My stop is at, my take profits at 40.75. I'm just looking for standard mean reversion. Price is 2 ticks away from my entry. It's short. I also have a process error here because I put a short in order. I put a short order in to close the trade, and I ended up just being short more. And so I scratch it all at 40.75 after it hits my take profit after normative flow. I'm not really watching the flow on this trade, just the initial trigger and the mean reversion. And then 925.52, 927.50. This is an extended mean reversion trade, 927.39. We're past the thin spot and pushing lower out of value, and I get my stop ran. We can't get above. Uh, I entered at 39, and there's an auction at 39 to 38.75, and it never breathed above 39. It just sat at 39 and it didn't hit 25. It did hit 25, but for like a split second, and then price rallied lower as the Q pulled. So now that was my biggest loss of the day. Uh, yeah, and then 39.25. I flipped long after that auction, and then liquid after the auction at 39 even to 38.50, and liquidity drying up down to 37.75. 38.25 to 37.75 liquidity dried up, and we're back up at 39.25, which is an LVN before today's VPOC. It's 9:28, so the market's going to open soon, and prices. I should have given this trade more time to breathe, because we saw buyers step in the form of an LE aggressively after I scratched the trade. Price is also upticking after I've entered. It's above my entry, which is a good indicator. And I get out for break even. It ticks, two ticks lower than my entry, and then buyers pile in aggressively, and then the auction with size begins to shift higher. And actually, I was correct. Yeah, I was right on this one to scratch it for break even, because after the LE liquidity event, we moved against that. And so all the price action that was built lower was actually most likely value shifting, but the key trigger for value shifting was me being long, and then the explosion of tape from the buy side and price coming back to my entry. So I thought I messed that trade up, but in reality, it was a correct read on buyers not being able to lift back into the distribution.